everyone, welcome back to Campden Interactive Series. Today we will be discussing an interesting topic that is navigating alternative investments. Wealthy families are diversifying their portfolios into new asset classes to hedge against the effects of rising inflation and currency concern in today's volatile and uncertain market. Venture capital, private equity, AIFS, etc. are some of the increasingly popular assets among large investors. In today's discussion, we will focus on how wealthy families are adopting new asset classes in their portfolios and what challenges they are facing. For this, we have with us Mrunal Jhaveri, who is the founding partner of ICE Ventures Jhaveri Family Office. Mrunal is a second generation family member and manages the family office. He is responsible for structuring and managing the investments under his family office. He is invested in multiple startups. Welcome, Mrunal, and thank you for being with us today to share your thoughts.
Thank you, Mr. Amit, for having me. I think it's been a great forum so far for every one of us, and all the discussions that we have attended and all the networking sessions that we have so far has been very fruitful for what we've been doing.
Good. So, Mrunal, for the benefit of our audience, it would be good to talk about your family background uh, and also what businesses you have within your portfolio, apart from, of course, the family office which invest. Uh, so it would be good to have information, background
Sure.
on that.
Sure. Yeah, so basically we are, first generation entrepreneurs. The business was started by my dad way back in the 1970s when he used to be, partners with a steel mill from Germany called Europipe, and then later joined hands with a steel mill called Dillingen. They used to import steels from Germany, high grade quality steels from Germany into, companies like L&T, Godrej, to name a few. So that was where my dad started the initial entrepreneurship. And then we moved on to manufacturing, where we started manufacturing flexible laminates, where we cater to companies like Nestle, Frito-Lay, Ferrero Rocher, Kellogg's, Taco Bell, to name a few. I am handling the family office, where we look at investments of the family, be it investments in equities. We also have a venture arm called Icebreaker Tech, ICE.VC in short, where we look at investing in startups and other alternate classes. And we've been investing since the family office is actually operational since 2014, where we do multiple investments through our office.
Good, good. And uh, so to get the context right, your father is the only first generation member, or you have uncles or anybody else
No,
involved?
father is the only first generation member, and the manufacturing unit, my brother Alay Javi is looking at it, and I am looking at the other business, which is the
Yes.
investments and the other. Oh, yeah.
And your father continues to be involved in the manufacturing or overall.
Semi-retired now, but yes, still active.
So good to know that your family office has been completed almost 8-9 years of being in existence, and very few families who have been as long as yours. When you talk to so many other families out there in the Camden community. Uh, Before, of course, we get into the alternative investments and all, just wanted to understand your philosophy about how you structure your overall investments, which are outside your operating business. The investments which I would call it as a personal wealth, which has been created
Right.
and is not plowed back. So, how do you do your asset allocation, and what is the percentage of various assets, broad assets? When I talk about asset allocation, like how much is equity there, and then how much is the alternatives, and then we'll deep dive into the alternatives
Sure.
afterwards.
Sure. Yeah. So yeah, I'd like to start off by thanking my dad. He's been grateful of giving me the upper hand to manage the family office all by myself. That means that whatever the allocation is completely done by me. Keeping the family legacy in mind, we've stuck to 70% in equities, about 10% in debt and bonds, 10% in the startups, and the remaining 10% in real estate.
Okay.
That's the allocation that we have, that I have been doing.
Okay. That's quite progressive because, our own family office, we don't go as high as 70% equity. Normally, it's been like 50 and then 30% debt and 20% all that things.
Right.
Uh, so, here when you say 70% equities is through AIFs, that will include your AIFs and mutual funds and direct
So
equities.
we all the equities that I've done so far, it's none of it is in AIF or in mutual funds. It's a direct equity investments which is being managed by me, and of course this is the full time management that I'm doing. So it's no mutual fund or any fund of that sort that we have been part of. So we used to do funds early on, but I think prior to 2020 we've stopped dealing with funds because of our personal
Okay.
experiences.
Okay. And have you also allocated, so you have not allocated to other fund managers, the PMS and AIFs?
No, not since the time I have joined the family office since about 2014-13. Since then, we stopped dealing with all the funds and fund managers.
Okay. Okay. And so, how would you describe your asset allocation to a alternative investments? In your opinion, what would be there within your portfolio?
Sure, we've been asset allocating since 2014, which is where we started our first startup investment. And we understand the risk involved in the startup investment because we also had our own startup, which my brother ran from 2015 to 2017, called Your Guy, and he got acquired in 2017. So we understand that space. So in the alternative class, I would say startup allocation is about 50 to 60%, where we have invested in one or two funds along with that, and the balance still remains equity in that comparison. But if I say the larger picture, the startup allocation on a 100% allocation would be 20 to 25% in the family office.
Okay, 20 to 25% of the overall.
Overall, yeah. So I would say 70% equities, 20% the startup investments, and the remaining would be debt and bonds and things like that in the alternative space.
Okay. And when you say debt and bond, you are talking about investing in credit funds and similar FMPs or other assets like that.
No, direct bonds, in 2008 when the crisis was there and there were bonds were lucrative back then. So the railway bonds, we did a lot of railway bonds back then, which probably were lucrative. Not now, but back in the day when the days were good.
Okay. And you also invest in any real estate assets?
Real estate mainly for personal consumption, not as an
Okay.
investment. Yeah.
No real estate fund or buying
No
real
funds in a
estate.
way. So as on date, we are invested only in two startup funds, one being Artha Ventures and other being GrowX Ventures. These are the only two funds that we have been invested in.
Correct. And so your major allocation and alternative would be in direct startups.
Direct
And I
investment in
believe,
startups, yes.
and I believe you have a large
Yeah.
portfolio of startups where you have directly invested. It's like what, 50, 60 companies. About.
Yeah, so we have about upwards of 75 companies invested from 2014, and we've invested in various sectors, not only in India but across US, Israel, and Africa as well.
Okay, that's quite commendable. And your build this portfolio over time, would it be uh, a seed funding or so the startups are more at the stage seed stage where you
Most of
invested.
70 to 80% of our investments have been in the seed stage, early stage.
Okay. And what is your experience being? Like, how are the startups doing? How did you go? How do you go about investing there? What you see through in there, finding the right startups, and like, how do you
Right.
manage that?
So
Once
mainly
the
there are
check
two
and
things that sure. Sure. So we look at two things. A, we should understand the business model, and B, we should know what the founder is doing. What is the founder is doing in the startup, and we of course look at the valuation. Should not be highly valued because most of the startups now are now raising the rounds, but they are doing undervaluation, as in they would have raised at around, for example, 5 million the previous year, but now they've gone down to 3 million. So we avoid high value companies. We look at valuations for sure. So these are the three aspects that we look at while investing. Of course, the due diligence and other things come into place, but that's a secondary thought.
and most of your investment you invest on when the company the average valuation is what like 60 to 70 crores.
No, so we've been early by early stage. We've been the round at either friends of family or the round after friends of family. So most of the investments that we've done have been anywhere between 20 to 50 crores, which is where the early seed stage raise has happened.
And you would probably be doing 4 to 5 crores revenue at that stage, I guess.
Not that much as well. It should be anywhere between 1 to 3 crores. If you say monthly revenue should be about 1 to 2 crores.
Okay. And how was the experience being? Most of the startups are doing well. Have you existed any startup?
Yeah, I
What
think
was
we've had some startups that have shut down, but I think most of the startups are in good growth phase. We've got the exits. We've got startups closing their rounds. I think it's a mixed experience in India. It's still going good, but if you want to invest now outside India, the government has come up with some rules that we can't understand. So we stopped investing outside India, but I think in India we're still happy with what we've invested. And the main reasons why we chose the companies was because they were solving the problems and also building the ecosystem around it. That is why we chose to be a part of this startup investments.
and what was your thought in mind when you wanted to invest directly in these startups because you're passionate about them and you are working closely with them, or you feel that they will get a higher valuation and a higher return compared to investing into a similar fund like Artha. Uh, what was there in your mind?
Sure. I think multiple thoughts came to my mind while looking at the startups. I think, of course, the higher return would be there, along with the diversification in the portfolio. But more than that, the extra job creation that these startups do. Some of the companies have employed 50, 60 people in their payroll. So that is a sense of satisfaction that doing something for the economy via your startup investment is what we looked at.
And how much time you're personally spending on each of those companies?
So I think on ICE we see, because it's again a company that we started in 2016-15 as a professionally run investment company to invest into the startups. We look at depends what level of time it requires. We have spent more time than the family office at times in these startups when required. Sometimes we spend not more time in the family office. So things like that is what we've not really considered in terms of the time management so far, because wherever the attention is, we'll give it, we'll give our time over there.
And you mentioned that you have a proper company called I Ventures, which houses these investments. So do you have a team also like analysts
We
and
are in the process of building the team right now. We are three people running the show. Me and my brother and a friend and a partner sits out of Dubai. He's handling the global investments. But mainly me and my brother Alay, we are looking at into the operations of the company.
and uh, most of these startups you are getting deal flow coming to you to your sources or you are of course banking on co-investing with others.
Again, multiple sources, networking, through some lot of the friends are sitting in the VC funds. They keep on sharing the deals. A lot of the folks are in the network accelerators, and also through the networking sessions, we get our deal flow. We've also partnered with accelerators like IIT Kanpur, all IIT Madras, IIT Bombay to get our deal flow. So bunch of avenues, and of course the founders of our invested portfolios also do share their deal flow to see whether if we want to invest or not.
And as far as the investment decision goes, you have made sort of a in-house IC between you, your brother, and like
So
it's your
I do all the due diligence and the final checklist of what companies we have to invest, and then it's me and my brother who take a collective call. If it's a yes from both ends, then we go ahead.
okay. Nice. And which company? Which are the few companies where you are passionate and which are close to heart within your portfolio?
Sure. A lot of companies I'm passionate about companies like Farm Easy, Country Delight. I think the first investment that we made was Super Daily, so where we got an exit, and that's always going to be close at heart because that was the first investment that we made in 2014. And yeah, I think out of 75 companies, all the companies are close to heart, but some are winners, some are losers, and of course the founders that have shown great potential and desire to build the company from nothing. Those are the companies which I really look at backing. So those are the companies in the portfolio, and the list is big. I'm happy to share the list later on.
Okay. Yeah, that's very good. And well, how do you manage the? You said you have 70% into public equity. So you have this is your 25%, 20 to 25% is your private deals, which you
Right.
created the portfolio and the equities. Since you said you are doing directly and you're not going to the fund manager or
Right.
any AIFs. So how are those equities getting managed? You have some external advisor
So
or
we are so we follow two philosophies over there. We follow growth investing and we follow value investing. And when we invest in a company, we don't we look at investing in from for years to come. And there are two portfolios in the family office. One portfolio is the companies which my dad had invested from the from 1990s, and those companies till date he has not sold a single one of them. So those companies being Reliance, Larsen and Toubro, things like those names. And I've also built a portfolio, a growth portfolio, which I look at on a regular basis. But again, it's kept in mind that these are long-term companies which we invest and we do not, get bothered by day-to-day incidents that are happening in the markets. So we don't have a very big list of portfolio companies, total about 30 to 40 companies in equity that we invest, but we look at long-term investment.
and what is your view on the equity market in India, the public equity market, the way it's been happening over the last 1 year and going forward? And what is your view on the private market with so much of volatility and
Sure.
with the new thing like Silicon Valley Bank failing and all things like that? So
Sure.
what is your what are your advice?
So on the equity markets, I would say I think India is a good growth story and a good consumption story. So whatever and all these investors, like companies like Apple, a lot of companies outside US, they are planning to set up their shops in India because of the China issue. So India has become that. And I feel India is still in a good space in terms of only consideration that these people have is they want to have a clean source of investment corridor when they come and set up their factories and offices in India. That's it. So I think market on the equity side is still good and it's still strong. On Silicon Valley Bank, it's an unfortunate incident that's happened, and the good companies or the good startups are still getting funded. There is a slow funding winter, but I think the good companies and the good founders are still raising funds because every day in news we keep on hearing that XYZ company has raised millions of dollars. All these cohorts by Y Combinator, most of the companies are getting funded over there as well. So again, but people have realized, or the founders have realized that they have to focus now more on the numbers as well, and not only the valuation or the projections. They have to show the numbers. If the numbers are there, they will get funded, no matter what the situation people are in.
Okay. So one last question: what is your advice for family offices, and especially families who are yet setting up the family office and they are, putting things together? Uh, what best way to do a asset allocation which you feel will give a blended return with same objectives?
Yeah, I think while setting up the family office, everyone should have a family office going forward. That it helps diversify the portfolio. It also helps to measure your financial goals and to see where you are at and what you want to do coming the next 5-10 years. In terms of asset allocation, I think it all depends on the family office. What are their timelines? What are their strengths and weaknesses? Who takes the decisions? Or even how much risk appetite that they have, to invest in these alternate classes, because alternate asset class involves a big risk while investing in terms of illiquidity. There is, less liquid options available. The timeline is more in terms of at least startups and other asset class that, you cannot invest today and, get out tomorrow. So they have to take this into consideration. But I think if they have the right network and the right connect, alternate class is one of the best classes to invest because the multiples that you get in the longer run, and the job creation that you do, for the economy is also there.
So, absolutely, I think you've spoken very correctly and aptly, and I thank you so much for giving us your thoughts and insights, which I'm sure the viewers and the audience will learn a lot from your perspective. And I would also thank you for being continued Camden member. And I hope that your value addition will be immense as we grow the Camden community. Uh, Audience, stay tuned with us for more such candid conversations at the Camden Interactive Series. See you next time. Till then, take care, stay safe, and stay well. Thank you.
Thank you, Mr. Amit. Thank you for having me.